Welcome to today's edition of Crypto Corner at InvestorIdeas.com. News on what's driving the cryptocurrency market. Hello everyone, this is Sam Mowers here. Welcome to another episode of the Crypto Corner podcast. For news today, we'll discuss the closure of both Signature Bank and Silicon Valley Bank over this past weekend. But just before we get into the show, a quick reminder that if you enjoy this podcast, please feel free to share it or leave us a review. And as always, I recommend checking out some of the other podcasts on InvestorIdeas.com. This includes the Cannabis Podcast, the Clean Tech and Climate Change Podcast, along with many others, all of which will bring you up to speed on the latest stock news and trends in their respective spaces. All right, so yesterday saw the closure of New York-based Signature Bank. New York's Department of Financial Services, or DFS, announced that it had taken possession of the crypto-friendly bank in order to protect depositors, and that the bank had total assets of approximately $110.36 billion and total deposits of approximately $88.59 billion as of December 31st last year. This follows news last week, of course, from Silvergate Capital Corporation, which trades on the NYSE under the ticker symbol SI, that it was winding down operations of Silvergate Bank, another crypto-friendly bank, in light of recent industry and regulatory developments. Cointelegraph reports that Coinbase, which trades on the Nasdaq under the ticker symbol COIN, crypto lender Celsius, and stablecoin issuer Paxos were among the crypto firms with funds reportedly tied up with Signature Bank. For its own part, Coinbase tweeted, quote, "As of close of business Friday, March 10th, Coinbase had an approximately $240 million balance in corporate cash at Signature. As stated by the FDIC, we expect to fully recover these funds." End quote. The closure of Signature Bank also nearly coincides with the collapse of Silicon Valley Bank, a subsidiary of SIVB Financial Group, which trades on the Nasdaq as SIVB. BNM Bloomberg reports that California financial watchdogs, the Federal Deposit Insurance Corp, or FDIC, took possession of the bank after clients rushed to withdraw money, causing a run on the bank. An excerpt from the article reads, quote, "Problems mounted for SVB after Peter Thiel's Founders Fund and other high-profile venture capital firms advised their portfolio companies to pull money from the bank. The calls followed parent company SVB Financial Group announcing that it would try to raise more than $2 billion US after a significant loss on its portfolio." End quote. In a Twitter exchange, Coinbase's CEO Brian Armstrong addressed the possibility of adopting and implementing its own banking features in light of the recent bank failures. Quote, "Definitely something we've thought about. Need a few more features like outbound wires, multi-user support, etc. Non-fractional reserve banking is definitely looking more attractive right now." End quote. That does it for today's Crypto Corner. If you would like to be a guest or sponsor for this podcast, contact InvestorIdeas.com. Investor Ideas reminds all listeners to read our disclaimers and disclosures on the InvestorIdeas.com website. And this podcast is not an endorsement to buy products, services, or securities. Investors are reminded all investment involves risk and possible loss in investment. To hear more InvestorIdeas.com podcasts, please visit InvestorIdeas.com/audio. And a reminder, you can also hear our podcasts on Apple Podcasts, Audible, Spotify, TuneIn, Stitcher, Spreaker.com, iHeartRadio, Google Podcasts, and most audio platforms available. This podcast was sponsored by AppTech Payments Corp. AppTech is an innovative fintech company whose mission is to deliver a better way for businesses to provide their customers with immersive commerce experiences. For more information, visit apptechcorp.com. AppTech trades on the Nasdaq under the ticker symbol APCX.